Apple shares have tumbled today after their earnings report. The stock closed more than 6% lower. Investors taking a deep breath after Apple warned that sales in the current quarter will fall for the first time in 13 years. That's despite announcing the most profitable quarter in American history. Now, questions are being asked if Apple has reached the end of its era of unprecedented growth. Let's peel back the layers to see. First, there's China. Apple's sales in the country are still growing, but not as strongly as in previous years. CEO Tim Cook warned about what he calls challenging global macroeconomic environment, unlike anything Apple has seen before. Then there are concerns that the iPhone has hit market saturation. The CEO said he expects iPhone sales this quarter will fall for the very first time. And the tech giant has long been dogged by criticism that it's being out-innovated by its rivals. Tim Cook also said about 60% of iPhone customers haven't yet upgraded to the iPhone 6 or 6S. Shelly Palmer, host of Shelly Palmer Digital Living, is here with me now on set. And Shelly, most profitable quarter in history and everyone's upset, but is there merit to this argument that the sort of best days, innovative days for Apple are over?
Well, assuming that devices matter, then you could argue the market is getting saturated, but phones do get old and break, and so there will be a level of phones that are sold forever. The big question I would ask everyone to consider is, what's the story with the data they collect? There are data-rich companies and data-poor companies, and Apple is a very data-rich company. Everyone's making the assumption that because the margin on the hardware is so great that if their hardware sales falter even slightly, there's something in their future that's going to be bad. First of all, I'm not sure that the traditional cell phone or smartphone that we understand is the final form factor of the commercial endpoints for Apple. They have HomeKit. They are into the auto world. They have HealthKit. At a certain point, Apple's going to have little sensors everywhere, and they know about as much about you as any company in the world. And what they sell with that knowledge will be advertising and other things that you have no idea about. So what's coming for Apple in the future, if you're just thinking hardware, you're too short-sighted. Look, yes, there's going to be a curve on hardware, but that's not the whole story.
People have often said one of their strengths is that they are one of the few vertically integrated companies, right? They did the hardware, but the operating system, the services, they are so complete like that, and they have one of the most loyal customer bases out there.
Yeah, there's an awful lot to consider when you're like foretelling Apple's doom. It's just kind of...
Is part of it because there's no faith in Tim Cook? Does that have something to do with it?
I hope not. Look, there are concerns about innovation at Apple, and what people are missing is that there's inconspicuous innovation in the form of iteration. When you make something slightly thinner, when you make something with slightly longer battery life, it may not feel to you like it's very innovative, but people are working hard on the next generation of devices. At a certain point, your clothing is going to have sensors in it. The world around you will have sensors in it. They will be connected to something. They're most likely going to be connected to an ecosystem owned by Google, Apple, Facebook. It's going to be one of the big data-rich companies that owns that system end-to-end because they can make that data actionable. So give Apple a break. If you're thinking 90 days to 90 days and that's how you play the market, then yeah, you're going to look at this and you're going to make some predictions about, well, Apple's going to, falter here, or we're going to have some stock adjustments. But if you're going long on Apple, sit back and relax.
And by the way, they make $20 billion off of services. A little footnote in the earnings that nobody really pays attention to.
You know what
Kudos to our David Goldman for writing it up.
Yeah,
on the
you know what they say, rich or poor, it's nice to have money.
Yeah, exactly. And they've got $200 billion of it, which a lot of people think they need to buy something with it. You mentioned Facebook, though, in terms of an ecosystem. We tend to think of Google Android and Apple iOS sort of battling it on the ecosystem. Facebook's in that race, too?
Well, they really are. If you look at what Facebook's done in mobile, it's really quite remarkable. You don't need to leave Facebook. It's actually sort of like the old AOL, but you don't notice it. They've got their own browser going. They've got their own video client going. You're inside of Facebook, and they are a very, very data-rich company also. Now, their earnings today were spectacular, and everybody's all excited about it. But if you think about the future, the way if we put the same lens on Facebook we're putting on Apple, what you'll see out in the future is here's a data-rich company that knows a lot about us, that is holding us in a very specific box inside. You could call it a walled garden. It's an old term, but it kind of applies. And their strategy is to be all things you need online. There are people in the world who go on Facebook using feature phones. They don't believe they're on the internet. Because they're on, but by default, using Facebook puts them on the internet.
They want that walled garden to be so beautiful. One thing that struck me today, I had an investor on who was urging Tim Cook to use that cash to be bold and to buy, you know, into the future and onto that service side that they're becoming. Mark Zuckerberg, is he the most underestimated CEO? Has been bold, has been making huge purchases. We're talking about virtual reality. He is sort of in all of these areas that you talk about.
He is. Mark has made some really extraordinary acquisitions. I don't have to tell anybody. Instagram's pretty smart. Oculus is going to, right now, maybe just look like it's not that smart. Trust me, that's a pretty smart acquisition. They've done really well in the way they've thought about the future and also the way they've bought unique users and the way that they have grown their business. There are very few companies, if you look out into the digital landscape, that have the kind of scale that Facebook, Apple, Google. These are massive numbers of people, and they've really crossed over from nightclub, which is the way people describe a place you might visit, to utility, where you're just going to be there every day. I think it's pretty obvious Facebook is a utility, Google clearly is, and Apple is about the most utilitarian company ever, and they're getting more so.
Are there room for all of them? Are they all going to find their patch and all do well, or at some point are we going to see cannibalization here and sort of turf wars?
I don't know that you're going to see the kind of turf wars you would ordinarily expect. These are different strategies. Apple has a hardware and software ecosystem end-to-end. Google tends to be based more on search. Their hardware is distributed over other manufacturers. So while they do have some hardware components, they're mostly a software company. Facebook is all software all the time. And so they're different approaches. You can throw Amazon in that mix. You can throw all the tier one techs into that mix about how they hold consumers together and how they deal with the number of uniques. This will consolidate over time, but I think it's going to consolidate to the larger players. And from my perspective, it's 100% about data and making data actionable. If you can turn information into action, then you have a future. The methodology to say that this is the final form factor of a smartphone or that this is the final sensor that's going to be an endpoint for data is so technologically short-sighted, but the data's forever.
And you know what's really funny? All those CEOs are looking so far in the future, but they are public companies. Our investors are used to quarter, so there's a little bit of a culture clash going on between the investing public and these CEOs. But so far, they've been able to have the day. Shelly, always great to catch up with you. Thank you so much for coming in.
My pleasure. Thank you.
A lot of food for thought there. Now, still ahead, they say the greater the challenge, the greater the opportunity, and that is the mantra of one of the world's top oil bosses. We'll hear from him next.